Good morning, everybody. It's Tuesday, December 3rd, 5:26 a.m. Central Time. Grain markets are higher this morning. March corn futures up 1.5 at 434. January soybeans up 5 3/4 at 991. March Chicago wheat up 5.5 at 552 3/4. March Kansas City wheat up 6.5 at 547. March spring wheat up 6.5 at 594 1/4. We got some new crop estimates out of Brazil. Why don't we start there?
Private groups continue to project a record Brazilian soybean crop. StoneX is estimating this season's crop at 166.2 million metric tons, with exports reaching 103 million metric tons. Celeres is projecting the crop will reach 170.8 million metric tons, with exports totaling 107 million metric tons. The consulting groups attribute the projected record crop to favorable growing conditions and the use of high-quality farm inputs. StoneX noted that there is still some concern about dryness in southern Brazil. According to well-followed private group AgRural, as of last Thursday, Brazilian farmers had planted 91% of the total expected soybean area, up from 86% the prior week and also higher than 85% during the same week last year.
There's been a lot of talk about the soybean market and tariff man, forthcoming tariffs. And I think a lot of people believe that Trump and the probable trade wars that are coming maybe in January, maybe not, I don't know. But I think a lot of people believe that Trump is responsible for the weakness in the soybean market. And I am here to tell you that he is not. This is not he's not the soybean market's biggest problem, and he hasn't been for a long time. The problem is just plain old boring supply and demand. World soybean ending stocks are projected to be record high at 132 million metric tons. Now, the ending stocks number in itself is not the best indicator. The stocks to use ratio is the best indicator, and the stocks to use ratio, world soybeans, is projected to be nearly record high at 33%. Now, if you end up with the Brazilian crop that's not 169 million, but maybe it's 175 million, and that sort of talk is definitely out there, you could very easily end up with a stocks to use ratio that's 34-35% globally. That's very possible. China soybean imports, you think maybe there's some sort of demand problem, and there isn't. China's going to import or projected to have the second largest import program on record this year at 109 million metric tons. And all world soybean imports, all countries combined, are projected to be record high at nearly 178 million metric tons. So we don't have a demand problem. We've got really is more of a supply problem. Brazil's producing too much. The U.S. produced too much last year. We are expanding crush capacity in the United States, but not at a pace that's strong enough to offset what we're losing in exports. So the soybean market has a boring supply and demand problem. It's not exciting. We've talked a lot about Trump because it's new. We have to follow it. It is important. It's not the most important thing, though. You're looking for a reason why is the soybean market sub $10 on the board? It's this stuff. It's this plain old boring supply and demand stuff. It's not because Trump's getting into office here in 6 weeks, 7 weeks, whenever that is. The forecast does look pretty good for Brazil. There's some pockets that are going to be drier than normal here over the next 10 days, but not totally void of rain by any stretch of the imagination. So I think that you're going to see more crop estimates out of Brazil for soybeans in the 170s here during the next couple of weeks.
Cargill is planning to lay off thousands of workers. The agricultural trading giant will lay off 5% of its 164,000 workers. The majority of the layoffs will occur before the end of the year. They will not impact top executives, but some senior leaders will likely lose their jobs. Record global corn and soybean crops, along with the U.S. cow herd declining to its lowest level in 7 decades, has pressured Cargill's profits. During fiscal 2024, which ended back in May, the company's profits dropped to $2.5 billion, the lowest since 2016.
So the article would indicate that bumper crops sent corn and soybean prices tumbling, and that was a bad thing for Cargill, probably resulted in reduced margins. Also, the company has spent a lot of money and a lot of time on its beef processing business. For Cargill, the squeeze has been compounded by the smallest U.S. cattle herd in 7 decades. The company has spent much of the past decade turning itself into the third largest U.S. beef processor. So as with a lot of these companies tied to agriculture, whether it's John Deere or Cargill or ADM, we're going to talk about in a second, there's a lot of problems in the any business that's tied to farming right now, essentially, which is not a surprise.
The investigation into ADM's accounting errors has expanded. Repeated accounting issues in its nutrition division caused ADM to revise its past earnings twice this year, resulting in a loss of billions of dollars in market value. The discrepancies prompted the initiation of an ongoing civil investigation by the SEC, which began back in February. Additionally, in recent months, the U.S. Attorney's Office for the Southern District of New York began investigating ADM and its employees. The probe is examining whether ADM committed securities fraud by manipulating intersegment transactions to inflate the nutrition division's profits. ADM maintains that the accounting errors did not affect overall profits. The company's stock continues to struggle and is now worth about half of what it was worth back in 2022 when it peaked.
I had a feeling we hadn't heard the end of this, and I still don't know that we've heard the end of it. That being said, the stock is a good gauge of public perception and exactly what's going on. So the stock really tanked. The ADM stock tanked in January of this year. That was when the accounting issues became public. And it's really consolidated to just drifted slightly lower since then. We posted some fresh lows at the end of November, but then it bounced back. But the performance here is indicative of a couple of things. I mean, probably some of the same problems rather that Cargill's dealing with, just reduced margins, but also these accounting errors probably the bigger thing. The ADM stock is down 25% year to date, while the broader stock market, the S&P, is up 27% year to date. So not good action at all.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
P. Meyer was on yesterday. We did about 45 minutes of uncut discussion regarding the grain markets, grain marketing, biofuels, policy. We also made another bet in our previous bet. I bet Pete, I believe it was late spring. I said, Pete, the funds are going to get long corn this year before the end of the calendar year. And he said, no, they won't. And I won. So now Pete's doing a double or nothing. And the next bet is with regard to soybean price direction. The next dollar in soybeans will be up or down. And believe it or not, I know you guys love to hate on me. Joe, you're a perma bear. You always talk about bearish stuff. Guess what? I took the up. I'm betting that beans are going to rally a dollar before they break a dollar. Anyways, if you want to see the premium stuff, that video with Pete was absolutely fantastic yesterday. Go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. There's no upsell. There's no hidden sell. I don't even want to talk to you. Send me a text message if you have a question, but we're never going to call you. We're not going to sell your info to anybody. Super easy to sign up on your phone. It takes about 30 seconds with your credit card. We do Apple Pay, Google Pay, Cash App, any of that stuff. Our morning email goes out at 5 a.m. Central Time. Our midday video blast goes out at 10 a.m. Central Time. This includes all of my cash grain marketing recommendations broken down by crop year, and percentage. Give that deal a shot this morning, guys.
The funds reduced their net long position in the corn market last week. CFTC released weekly commitment of traders data on Monday. As of Tuesday, November 26th, large money managers were net sellers of 23,000 corn contracts. Funds were also net sellers of 10,000 contracts of soybeans and 1,000 contracts of SRW wheat on the week.
Super neutral position by the funds. When you combine corn, soybeans, and SRW wheat, funds are just net short 35,000 contracts. So there's not a position of consequence here. The funds are going into the end of the year with kind of a neutral bias. Premium subs, you guys have the full fund tracker charts in your email this morning.
U.S. soybean shipments declined slightly last week, but remain well above year-ago levels. USDA reported that 77 million bushels of beans were inspected for export during the week ending November 28th. The print was down 1.4% from the previous week, but up 78% compared to the same week last year. Corn shipments were reported at 37 million bushels. The print was down 7.2% compared to the previous week and down 20% versus the same week last year. Wheat shipments were reported at 11 million bushels. The print was down 19% from the previous week, but up 57% versus the same week last year.
Soybean shipments very strong and actually pretty strong seasonally. I know this is like a spaghetti chart if you guys are watching, but we're doing quite a bit better than average for this time of year. We're in the midst of primetime U.S. soybean shipping season. Now, the haters out there, and there's a lot of haters, they'll say that, some of these importers are front running a trade war, whatever. I don't know. You can only go off the data. We don't know what's going to happen with any of that. And the pace of corn and soybean sales has been very good. The pace of soybean shipments has been good. And the pace of corn shipments, I'd imagine, will be good when we get into primetime U.S. corn shipping season, which is more so after the first of the year, barring any sort of big trade war tariff blow up type thing.
USDA reported a flash sale of soybeans on Monday. U.S. exporters sold 5 million bushels of soybeans to China for delivery during the current marketing year. Since starting off the marketing year very poor, soybean sales have recovered and are now the sixth best in the last 10 years.
Yeah, big recovery in the book of soybean sales in general. This is a small kind of routine type sale to China. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 75 cents lower to 15 cents higher. Feeders saw losses ranging from $2.02 all the way down to $3.07. Box beef saw substantial gains yesterday. Choice ended the day at $313.01. That was up $2.49. Select ended the day at $2.77. That was up $2.70.
Outside markets, U.S. dollars off a little bit. Stocks are about flat. Bonds are off a little bit. Gold's up $7. Crude oil is up 75 cents in the January WTI at 68.85. Have a great day, guys. We'll be back on Wednesday.